Back, the markets are not doing much, so let's focus on gold then. Gold has moved to a 5-year low currently, and in fact it's taken a knock of close to around 4% in the last week itself. We have Jonathan Barratt, the economist and CIO at Ayers Alliance, who joins us now. Hi Jonathan, thanks so much for joining in. We know, Jonathan, you have been a bit of a bull on gold in the last, in the recent past. But what's your take now? Have you turned it around a bit? Could you confirm? Could you tell us what's your take currently on gold? You're no longer a buyer. Have you turned it to a neutral stance?
Yes, look, absolutely. I've turned it to a neutral stance. There's no doubt about it. It is quite an interesting move today. Remember, the move happened earlier this morning when we had very thin volumes going through the market. It appears to be there was a very large seller, and we actually think it could have either been a very large bank that has quite a lot of derivative trades on, or it could have been a Chinese company unwinding one of its commodity hedges. But it did seem very strange to come through very early in the morning when we had no liquidity in there. Have I changed from my bull? Yes, I have to be neutral. We have taken out that 1135 and 1145. That to me was a crucial area. So yes, at the moment I've got to be neutral. I want to see how the dust settles before I make a proper call.
Hi Jonathan, thanks for joining in. So you've changed your call on gold from buy to a neutral. Have you also altered your target price on gold?
No, I don't think so. I still think that I need to think that what we feel could occur will occur. I still like the technical structure of the way it's been traded. It will be interesting to see whether or not we do get a night, particularly in New York, where we might trade back through that 1125 or 1135. If that does occur, then that does conclude that a low of some significance is important because it only spent a short amount of time here. So tonight is very crucial for me in terms of the bullish outlook I've had, and I'll just have to wait and see.
All right, Jonathan, but what if we don't get a bounce towards that 1135 approximately that you're talking about? Then do you think we're going to 1,000?
Look, I think if we don't get that bounce, then I think it'll do what it's been doing for the last couple of months, which is just sideways price action. And I think as the other markets continue to perform, people will continue to switch out of any gold holding and move further and further into exposure in other areas like obviously the equity market. So I do think it will be right, but at the moment my timing has not been very good.
Okay, you indicated that we saw a very large deal, maybe some offloading early in the morning at a time when the liquidity was very low in the Chinese market. Would that give you a sense that maybe this was a one-off? And fundamentally, how do you see gold moving now, based on fundamental factors like Fed?
Yeah, look, I do believe it was more of a one-off type of transaction. I think one of the interesting things over the weekend, or particularly Friday and today, was the increase in gold purchases from the PBOC. And when you saw today that they revised their increase in purchases upwards of 57%, you still get a sense that a lot of the reserves around the world really enjoy gold as part of their quiver. And I think a lot of investors actually also enjoy that because it is a store of value. So I think at the end of the day, it's one of those moves which was a one-off. I do think as a store of value at these levels, it's cheap. At 1135 and 50, I thought it was cheap. So obviously it's a lot cheaper now. But obviously I want to see a little bit of water go under the bridge before I go back in.
All right, Jonathan. Pleasure as always to get your view on gold. We'll keep touching base with you and in fact get your latest update on it. Thanks so much for joining in today and to giving us a quick take on gold. But let's get in someone really who will be affected by this price erosion in gold. We have Mr. Umesh Barratt, the MD of Shree Ganesh Jewllery, who joins us on the phone line from Kolkata. Hi Umesh, thanks so much for joining in this afternoon. Could you tell us what kind of impact does this fall in gold prices have on your company specifically? And in case there is a big benefit, could you quantify that?
The prices of gold has moved down. It is a corrective measure.
All right.
But as Indian market, so to say, is not affected so badly because the dollar has moved comparatively in last year. We are at 64 levels, 63.50, 64 levels. So the price overall, the impact is from 26,000 to 25,000 rupees per 10 grams. So to say, the jeweler fraternity is looking this as an opportunity to sell more. This we feel the price of gold is bottomed out. This is the bottom. And of course, there is a this being, not a very high peak season in India. So that has also affected in this price coming down a little bit. Otherwise, we don't see such slackness in coming months.
Okay. Umesh, hi, afternoon. So could you just give us the sense that gold prices in rupee terms, how have they moved in Q1, in the quarter gone by, say on a quarter-on-quarter basis, as well as on a year-on-year basis? You gave us one figure, it's fallen from 26,000 to 25,000. So that's a decline of nearly 4%. Would that be on a year-on-year basis? And even currently, how would they compare with on a year-on-year basis?
Last year, the prices were around very similar stages, even though the price in dollar terms was 10% higher. The rupee has come down, depreciated, so making it gold a little more expensive. So overall impact we don't see in last 3 years. Today we are looking at gold in dollar terms at 1145, 1146 dollar per troy ounce, but gold prices in rupee terms in last 4 or 5 years has not come down so much. So quarter-on-quarter basis, I do not have the figures, but last year, this same quarter last year, the third quarter of last year, we saw very similar prices of gold as of this year. And for future, my view is this is bottomed out, and we have definitely seen the bottom in rupee term. And of course, internationally, it is historically low. Gold has come down in last 5. It has peaked to $1,900, $1,850. So this is definitely a bottom.
All right, Umesh, then let's get your take in terms of, for your company specifically, when can we see your operating profit? Because the last time around we saw an EBITDA loss. So do you believe that in the coming quarters we could see a positive EBITDA number?
Yes, of course. We believe the company will turn around, and we have received some orders, export orders in not specifically gold, but diamond jewelry, which of course is gems and jewelry. And retailing, we are looking up to tie up with one major overseas retail investor. So we may see value and profits coming back. Of course, not this quarter, but in the last quarter of this year, financial year, that is the March next year.
Umesh, historically when gold prices fall, how much ever, say 2%, 3%, do you see a concomitant increase in volumes, which, so net, the company is better positioned because of the fall in gold prices?
It is always, this is an Indian sentiment which plays, to the purchasing power of Indian people. When there is a dip in gold prices, generally people go and buy, gold jewelry. That increases the profitability, increases the volume a little bit. But overall, you see, it is fundamentally, it doesn't make a difference in, top line, year-on-year basis. But yes, demand does go up for if now today all around.
So
India,
are you better placed because of the because of the fall in gold prices or not?
When the prices of gold are little slack, so people do buy. It's an impulsive buy.
Mm-hmm. All right, Umesh.
So
yeah.
Go ahead. Thank you. No, it's all right. Thank you.
All right, Umesh. Thanks so much for joining. I agree with that point.